Andrew Holland as well joins in on the show right now. Andrew, hi afternoon. Are you also digging out within the PSU pack? Because that clearly seems to be the flavor of late.
Yeah, no, it's the whole. I mean, let's take the banking sector. It's been a laggard now for some time. So, not surprising you get some kind of a relief rally or rally in the index. But it's not compelling. It's not. It doesn't give me the confidence to kind of say that we're not going to drift down over the next few weeks. There's a lot of events ahead of us. There's a lot of kind of messy global factors which are still playing out, whether it's China, Japan, and the Fed, obviously, with their policy this coming month. So, I expect a lot more volatility. And of course, here in India, we have our own kind of inflation, stroke monsoon, stroke El Nino to face. And I think that's something that the market has been getting into grips with. But that's why we saw the market fall quite a bit last month. I think that theme will continue to play at least until it starts raining.
But you know what, we were also speaking, Andrew, with Samir just this week, and he was talking about how HDFC Bank is perhaps the best contra bet to take, given the fact that stock is available almost at the prices that it was 3 years ago, despite the merger and everything. Would you buy that argument?
It's cheap for a reason. I'm sorry, it's cheaper, or it's a bit similar levels to what it was 3 years ago for a reason, and that's because the market's still awaiting to see how the merger pans out, and I think that will continue to be a wait and watch approach by the market in terms of before it wants to give the thumbs up to the merger. And of course, I've just been looking at some data which is showing, kind of credit growth is starting to slow. And surprisingly, everyone's giving out unsecured loans, which is, again, somewhat surprising given the strength of the economy that you have to see loan growth through kind of going unsecured loans. So not sure the RBI is going to like that too much. Let's see if they take any action on it. And I think the second thing for the banks is obviously this race to garner deposits, and that's going to squeeze NIMs in the very short term. There's a big race out there to get it, and I've heard of rates of 8.5, 8.75 for fixed deposits to try and get this deposit base up.
HDFC Bank, but we have been highlighting MCX, which was higher by almost 5 to 10% yesterday, continues the momentum today as well. What's the reason for that? Well, Somit is joining us to tell us all about it. Hi, Somit. Okay, we'll try and reconnect with Somit, but the news is that the mock session happened yesterday, or even a day before yesterday as well, and the second session is expected today. If it does go all right today, perhaps the company will be able to adopt that software, and that will be the big news that will come in for MCX. But let's look at some of the other buzzers as well, and of course on the gaining side, you have RailTel Corp, which is higher by almost 16%. Vodafone Idea, that's showing great amount of traction as well, 11% higher. And then you also have names like Trident Limited, which is doing all right, apart from IRB infrastructure, etc. as well. Andrew, what about the capex and the road infra makers, etc.? Do you think this is just the usual rally that we see ahead of elections in the election year, or do you think there is just genuine pickup in terms of the order bookings and order inflows and the overall infrastructure development?
Yeah, again, I think that could well be the case. I think the way we've been paying the capex cycle is not the kind of the roads, bridges, and so forth. It's been more of the capex towards smart buildings, smart manufacturing. So that plays more into the kind of ABBs and Siemens in this world. I'm not saying that the government will continue to spend, that's for sure. So some of these companies, will see huge order flows, and I think that's what pushes share prices. And of course, as the market gets excited, you'll start to see, as we have seen, prices move higher. But it's always a problem here with execution. So as long as the order flows are coming, that's fine. That will help the share prices. But execution is always fraught with mishaps and lower than expected returns. So I'd say I'd rather play it through other parts of the capex cycle.
The other thing, Andrew, which we have been seeing of late is the fact there have been a number of these block deals, large deals, promoter stake sale, PE exits, etc. In fact, my colleague had culled out the data, and in the month of August, there were block deals to the tune of 65,000 crore rupees, almost the highest that we have seen in the last many months. What does it tell you? Is it a bit of a hurry for others to book profits, or they're just banking in on the kind of up moves that we are seeing across all sectors in stock?
Yeah, I mean, obviously, if you're a private equity player, and depends on the length of your fund in terms of the how many years you have to run it. Given the kind of big up moves, maybe in the kind of mid and small caps and some of the kind of just below large caps, it's tempting to take money off the table, right? And then you have fresh money for other funds or for other companies that you want to invest in. So yeah, and I'm not particularly worried about it in terms of the block deals. I mean, for some it's increased the liquidity. For some it will put them into new indices or in MSCI. So there's no harm in that. So I think it's fine. It's as long as there's big buyers around, which there are. They will continue to take advantage of the markets, and we should be happy that we can participate in the ones that we want to, and get the size that you want as well.
What's the take on metals?
I think metals is, there's two ways to think about metals at the moment. It depends on your view of whether you think China will do a bigger stimulus than they've been doing. And my view is that they still have to do more. I think they've been taking a pea shooter to their problems rather than a bazooka. So I still expect there's going to have to be more action taken. Yes, some of the things that they've implemented will help at the margin, probably increase GDP growth, or have a positive momentum, but it's not enough. So you could say that if they think it's enough, then I could tell you now that the demand problems in China will continue, and therefore you'll see commodity prices come off. So if you think there's another big stimulus coming, then obviously metal prices will continue to do well. I'm of the view that there'll be another stimulus by China, and therefore commodity prices will tend to move higher from here. The problem is in that is obviously that's not great for India as a in terms of inflation. So that's a negative for us. So a positive for China, a positive for metals, but not for India overall.
Since we're talking,
Andrew, before we let you go, still any undervalued pockets in the market that you identify? Some ideas that one could look at?
It's hard to find at the moment, isn't it? Everything's kind of moving up. If it's not a theme, then it's a block trade. If it's not a block trade, then it's some other factors like, say, China pushing up metal stocks today. So I think I don't mind when the market kind of drifts down, which we've been seeing over the last few weeks, last month actually. So more we can see that, I think we'll get a little bit more value. But at the moment, I'm not finding anything which is so compelling to talk about right now.